Hi, welcome to Speak Up for Our Planet. We're glad that you found us. All of our videos are of experts talking about what they're doing to save the planet and how you can help too. You might like to watch the videos live and ask the expert questions. In that case, just visit our website and click Join Us. Hope to see you soon. Talk is all about insurance, but not quite insurance as we know it, I don't think. You know what insurance is. You pay in when times are good, and then you hope that it'll bail you out when disaster strikes. But had it ever occurred to you that insurance companies might actually take an active role in building resilience and reducing risk? I think that's quite a new one. Flooding is a growing risk in our warming world. So I am particularly delighted to welcome our speakers tonight, who can tell us all about how this works. Jonathan, who is there, give us a wave, Jonathan. Works to measure and incentivize property level flood resistance. He works with industry and government, focusing on developing actionable evidence for resilience and on nature-based solutions, which I have to say particularly interests me. And he's currently developing a flood performance certificate, which I'm hoping he's going to tell us more about. Kate, who will pop up shortly, leads global partnerships to accelerate emissions reduction and adaptation to climate risks. So she takes a particular interest in risks associated with climate and global warming. She also has co-founded an organization that brings experts together to develop community resilience and to make property insurance more affordable. So in general, I think they are a very, very interesting pair. And I would like to start by introducing Jonathan.
Yes. Hi, and thanks everyone for coming. So Kate's gonna, I think, cover some of the global context and a bit of the insurance industry piece. Just sharing my screen here. Has that brought up my slides?
No.
No, not yet. How about now?
Yep, good.
Great. So yeah, I'm gonna cover more the flood and the UK context. So flood is let's see, did that advance? There we go. Yeah, so flood is something that's gotten a bit of press more recently, but largely wasn't very well known for the first few years of our existence, and I'll get into why that may actually have made sense for quite a while. And why it's perhaps changing. So FloodRe's purpose is to ensure the availability and affordability of insurance. We're not necessarily unique in that respect. There are many countries that experience natural hazards and catastrophes have these sorts of programs. There's the California earthquake program, New Zealand Natural Hazards Commission, so many countries have this sort of thing. FloodRe is unique in the second part of our mandate to manage over our lifetime the transition to an affordable market. So we stop existing in 2039, at which time the market goes back to risk reflective pricing. And that is an area where we're unique and drives some of the unique aspects of the program. So why were we created? Well, 2007 was the big driver. It was a massive event in the UK. That's been much larger than anything seen since. This is a picture from a colleague taken in Hull. So Hull was probably the worst affected community, about 10,000 properties there, about 50,000 properties across the country. And this illustrates also something that I'll come back to, which is you can see fairly widespread, fairly shallow flooding, which is sort of a newer phenomenon, although the flooding experienced in 2007 had a lot of different was experienced in different ways in different communities, but Hull was pretty widely impacted. So the scheme was set up, negotiated by insurers, and the government paid for by insurers. Insurers voluntarily took what is effectively a tax to pay for the program in exchange, and the part of the government agreement was that they would invest in flood defenses. So the scheme came into being in 2016, but was enacted by the Water Act 2012, and it created the program, which covers largely single-family homes. So out of scope are new build homes. To not create the incentive to create the incentive to build in a resilient way. We can come back to whether that works or not, but basically use the planning system to make sure that that homes built in flood zones are being done in the right way. And we don't cover businesses or rental properties to not underpin commercial activity. And we do not cover large buildings, so mansion blocks or large multi-unit residential, largely because of the leasehold structure that cover insurance that is a commodity product. And so in the UK, insurance is sold as a bundle. You buy insurance. You don't buy separately flood insurance the way you do in the United States or some other places where you buy the different pieces of your coverage. You buy insurance and it is all in one. And that works pretty well for the scheme, partly because when people buy coverage separately, they often underestimate their flood risk or their risk in general. People think they're not at risk, so they don't need that part of the coverage, but actually it's consistently underestimated. So the fact that it is a commodity product helps for the way the program works logistically and making sure that people have coverage broadly and affordably. So how does the program work? Well, there is an industry levy, about 160 million a year, that is basically paid for by the industry, that sets up the program and essentially amounts to the subsidy. Then a premium is paid for every property that is sent to Flood Re. For the consumer, they take out a policy with their insurer, and then the insurer decides what they're going to send to Flood Re. It's not necessarily high-risk homes. That's what it says on the slide, but they can send it to us for whatever purpose, for whatever reason they deem. And it actually works pretty well in the sense that there are lots of different views of risk, so we get a variety of different properties. We do typically get a lot of the high-risk ones, but not all of them, which makes us somewhat unique, or not necessarily unique, but is one of the reasons that people are quite interested in the program, because we make the market work, and I'll cover that, but without taking on all of the risk. So that's how it works. And then, of course, if one of the properties that has been ceded to us is flooded, then we pay for that claim. We cover the insurer for that. Yeah. Now, this really transformed availability of insurance overnight. If people had a previous flood claim, so those 50,000 properties across the country, the 10,000 properties in Hull, people found it really difficult to get insurance. About half people couldn't get it. The other half paid typically something like £5,000. I'll come back to that. But the way it worked is we onboarded insurers to the scheme, and now they can cede those properties. So overnight, or over the course of months, probably the first year and a bit of our existence, this is quite a boring slide, but it actually shows how it works, that, as insurers started to offer people insurance, they went from having people with previous flood claims went from having 0 options to 1 option to 5 options to 10 options. So now we've got a competitive market for insurance, and people can typically get, I think it's 95% can get 10 or more options in the market. So they can shop around for insurance, and, that tends to keep the prices down. The other, I covered the 2039 exit date, but we have a mandate to really work on that. And there are 3 big factors that we kind of take account of. The first is senior government largely spending on flood defenses, something I'll come back to, but something where, they've spent about £1 billion a year on flood defenses over the last decade. And, there's been some really positive effects to that. The second one is at what actually happens with the homes. So the first one is really about the national level risk. So climate picture and community flood defense picture, more senior government responsibilities. The second one is really where we focus our efforts at the home level. What is the cost of damage to the homes and what is the level of resilience to the homes? And, are we able to protect them at a home level? And then the third one is really about the market. Insurers, are they providing insurance? Is there coverage out there that people can get? And so those are the three factors that we see as really mattering for the future of insurance in the country. And obviously they're broken out into, you can see all the sub factors. I won't go into that. We have reports in both our annual report and our kind of transition plan in 2023 was quite detailed about each of those. So there's about a dozen things that we look at, and those make up those big buckets. But I won't get into them just for the sake of getting through this relatively quickly. Where Flood is often seen as unique is we do a lot on resilience. That 2023 plan laid out a lot of what we do. Build Back Better was a big part of it. It was already in place, came into force April 2022. And then building around that, I'll cover some of the pieces, but they're really about how do we incentivize and measure home level resilience. So Build Back Better is our flagship program. It really took a lot of convincing of insurers to get beyond the principle that betterment is considered a bad thing typically in insurance because, it's supposed to be like for like for a variety of reasons, simplicity, transparency, but also not creating an incentive to claim or overclaim, those sorts of things. But in this case, people realized it, people are not making the choice about flooding. It is not a kind of within the homeowner's gift typically to affect a lot of these things. So when rebuilding from these devastating floods, why not do so in a way that will make the home resilient? So we provide an extra £10,000 for a home to add those measures, whether it's floodgates or resilient kitchens, elevated sockets. Some of these things are cost neutral, and insurers are starting to rebuild with them anyway because if you're in a flood zone, you may as well have waterproof plaster. But in some cases, adding the flood doors or windows, many of which are sort of new and niche, takes extra money, and we provide that. So. Um, and it's also about the changing nature of the risk. I mentioned widespread shallow flooding. That's typically surface water flooding. A lot of rain comes down in one place. Paved surfaces can't absorb it, and drainage can't cope. So you see, these sort of flash floods, urban floods, surface water floods, as they're different terms for it. In the flood maps that came out first update in a decade that came out last December and throughout this year, the big increases in surface water in this type of urban flooding. And so it's also the most difficult to defend at a community level. So you can do sustainable urban drainage systems or permeable spaces, but you can't build a flood wall in quite the same way if you don't know where it's going to come down. And so that makes it a much harder risk to deal with. But you can protect homes against it in a different way. The UK the UK building stock is typically it's more expensive. It's well built, but expensive, and but at the same time structurally possible to kit out with these flood defenses, flood doors, floodgates, etc. People are adapting their homes. What you see on the left is an adaptation that reduces the risk. The adaptation in the center is one that adds livability. People are adding very nice kitchens and atriums. but that actually increases the cost of rebuilding and, in this case, the vulnerability to flooding. So there's not very good transparency about what's happening to homes. And there's also very little awareness of things like reversible, not self-closing air bricks. So these things basically have a little float valve that when the water hits them, they close, and that keeps it from entering the home. But it's not a widely deployed measure, even though it's quite low cost and protects you up to the threshold fairly readily. So because these things are not well understood and well tracked, people don't have a record of what exists in their home. We have been developing flood performance certificates, modeled on energy performance certificates. This will tell a homeowner, this is your home is vulnerable or resilient to flood. You can do X, Y, Z things to improve it, and that'll also give information to insurers and to mortgage lenders about what that home's vulnerability or resilience is over time. So this is something we are building from the ground up based on the EPC. Right now, we've developed the kind of scoring methodology underpinning it and piloting it into next year. We also, in October, so Hull University retrofitted, this is a project of ourselves and the Environment Agency retrofitted an aquarium tank to be able to do the testing of these sorts of measures, property level flood resilience measures. So there is now a facility. There have been a few other facilities, largely commercial or extremely large. This one is more kind of right-sized for a home level intervention. To test the effectiveness of these measures so that we can actually start to track them, and that'll underpin the flood performance certificate methodology and those sorts of things. There was also during Flood Action Week last month a launch of a report by Westminster University Vice Chancellor Peter Bonfield, who did a previous report on this, but how to scale up that industry. You know, it's quite small, quite niche, and and um, you know, trying to get it mainstreamed is a huge challenge. But Peter brought large number of people to the table: developers, architects, designers, builders, merchants, all the people involved in both the delivery chain and the sales chain, as well as the information pieces, mortgage lenders, etc., to agree a whole series of actions that we're going to be taking over the coming years to really mainstream flood resilience. We've also got a number of initiatives to raise awareness. We try to be innovative in doing that. We've done a thing of working with DIY influencers. If people are, doing that DIY renovations to their home, then trying to make them aware of flood resilience and what they can do to improve that. The Probably the most successful thing we've done was a resilient garden at the Chelsea Garden Show. We're quite worried about people paving over paving over front gardens to build driveways, because then the water just runs off to the neighbors, and you've seen a pretty big disappearance of green space in the UK's urban areas over the last 3 decades. Um, but there are things you can do to store water to make your homes resilient and beautiful. And so this really landed that week. We are pretty happy when we get maybe 1 million media hits, couple million. And this was on the BBC every day. I was at the garden. It's very rare that we have people lined up like 10 people deep to hear about flood resilience, but there were. And we got 3.5 billion media hits. So it really landed in the zeitgeist for that year, connecting kind of climate action, resilience, people's hobbies and something that they enjoy, as well as something beautiful. So it really kind of brought a lot of things together. How is the scheme performed? And this is my last couple bits. I mean, Kate will talk about experiences elsewhere. I was saying I was just in California doing an exchange or kind of a week with the government there, talking about how Floodry is doing, maintaining market access. And it was really interesting to see. I mean, the middle two are photos that I took in the Palisades of just an area that's gone now, and it is interesting to see what they're doing about crediting resilience, because insurance there is extremely expensive, and so they're doing things that can bring the costs of that down. Um, So we'll maybe come back to that during the Q&A, and I think Kate's going to cover some of that global context. But what's happened since Flood Re was created? Well, that's the decade of Flood Re's creation, quite floody. Since then, we've been relatively lucky. I think we would say we've been lucky in terms of precipitation, but actually a huge part of it is the flood defenses. So, there was this ambitious program of building and maintaining the flood defenses by the Environment Agency, for which they should be commended because we're seeing fairly significant events, probably not the sorts of 2007 events by any stretch, but the number of properties affected has been lower than it was before. So, it's a bit of luck, but definitely some positives in terms of protection. And that's allowed us to maintain probably the smallest insurance gap of major economies. So we've got about 22% gap versus double that in America and 4 times that in Italy. But part of that is the quantum, 10 billion in damages in 10 years over in the UK, and 1.3 trillion in the US. The scale of damages from some of these events, that's the wildfires, but also hurricanes in Florida. I mean, these things are huge, causing enormous amounts of damages. So we've managed to maintain insurance penetration, but in the face of relatively small events. But 80%, so 8 out of 10 people have insurance. That's quite good in a voluntary market. It's not mandatory. Some other places are. And about 95% of owner occupiers, so homeowners. But that's, it's held up pretty well. And what has happened to costs? So, the biggest change was if you had a previous flood claim, costs went down from typically about 500, yeah, sorry, £5,000 for some of those areas or if you could get it at all, half of people couldn't, to kind of 600, £700 around that time. And that has since increased. We've seen inflation over the last roughly 3 years. And that's maybe about 1,300 now. But without Flood Re, we've done calculations. If we went back to what we had before, it would be about £10,000. So, insurance at £1,000 is annoying to many people and kind of it's a grudge purchase, we say, but it's a fraction of what it is in the US, where it really is about $10,000, in Australia, similarly. Um, so that's the flood re-subsidy coming into effect. Our seeding, a lot of that's in, you see it's quite widespread across the country. We don't pick up all the risk in any one place, except Hull. We have a huge amount of seeding in Hull, and part of that is that wide distribution of properties, but there's a few other factors to do with the flood models and kind of selectivity of properties. But we've seen properties seeded to Flood Re that have never flooded, so it's an interesting concentration in Hull, but actually quite a dissemination across the rest of the country. And we have seen inflation in the last 3 years. So if you had a recent claim, average prices have roughly doubled. Even for those with just flood risk, it's increased by significantly, and just everyone in the market has seen insurance prices go up. But part of that is the overall cost, these reinsurance costs globally affected by these events. And the cost of claims our cost of claims has roughly doubled in 5 years as well. So rebuilding homes is a lot more expensive. So just wrapping up, what are some of the things? Availability is absolute. I mean, we've been tracking 1,700 properties for a decade, and I've never seen one not get a quote. I mean, I saw one 3 years ago not get a quote for 1 quarter, and that was a really expensive property in London. And then it went back to getting quoting. So insurance is out there, but it's become more expensive. And that's relative. So compared to other countries, we're maybe a tenth of the prices for those, repeat flooding properties or, repeat claim properties, but those prices are still going up. So something to think about and something we really work on, because that's where the resilience comes in. We need people to be taking the Build Back Better, because we're actually picking up a lot more properties. Our program increased by 20% last year, which is It would be good if you were a market operator, but not necessarily good if you're the backstop. And California saw that in 2023. You typically don't want to see the crutch being leaned on that much more heavily, but that's where we're at. And then BBB, interestingly, only about a third of properties that were eligible for BBB took it. And initially we thought that was homeowners saying, well, it's not for us. But actually, a lot of it is, we're finding a lot more of it is about timing of when they're asked. It's a difficult time, the length of time it takes to get products, but also the delivery chains, whether it's being kind of sold in the right way, and we're trying to improve that uptake. But we
Jonathan,
see that as kind of key for the future. And that's it. Yeah.
Jonathan,
Yeah.
can I just stop you there? There are two
Yeah.
words on that screen I don't understand, seeded and BBB.
Oh, sorry. Seeded are properties that are sent to are policies that are given to Flood Re. So, an insurer is a reinsurer. An insurer cedes policies to a reinsurer. We basically in that, when I showed the diagram you have the customer who has a policy with the insurer, but that insurer reinsures with us. That's called seeding. And then BBB is Build Back Better. So a third of properties that could have taken the resilience measures did. But there was a variety of reasons. I think that goes far beyond just homeowners saying no to it, and is much more about probably the delivery chain that's getting those things, that's making people aware and doing them as a kind of comparable timing and cost. So that is it. Uh,
Okay, thank you very much. We already have some questions.
yeah.
Kate has been keeping me informed. She's she's making progress.
I'm
Okay.
here now. I'm
Oh,
here,
hi.
Jane.
Hi, great. Hello,
Hello.
Kate. Such great
Yes, but
timing.
maybe let's do some questions for Jonathan first, or we can tag
Are
team.
you up for
Whatever is the
going?
best for the group.
Are you up for going ahead straight away, Kate?
Sure. Yeah, if we think that's
Okay.
best. I don't
I
know if
think
we wanted to briefly
that's
touch on the.
then we can have all the questions at the end.
Okay. Well, thank you everyone for joining me. How is the audio quality?
I can hear you.
Good? Can you hear me? Okay, great. For context, I'm currently at JFK Airport and it's taken 2 hours to get through airport security, so apologies for being a bit delayed today. Um, but yeah, I thought that Jonathan obviously has just given a fantastic presentation on Flood Re, and I'm sorry to have missed most of it, but I thought that I'd maybe speak a bit very briefly about sort of the broader context of insurance. As I'm experiencing it working from the United States in more of a global role. Although, as Jane maybe had mentioned, I did spend a few years in the London market, which is where I got to know Jonathan in the first place. Um, so I'll share a few slides here. If you just give me 1 second. Let's see. Is everyone able to see my screen? Yes. Okay, great.
Yes.
So Jonathan has already covered a lot of this, but I wanted to maybe speak a bit about sort of some things that are generalizable from Flood Re to other insurance markets outside the UK, and then also think about some of the challenges and opportunities that are a bit more universal. So this first slide is something that Jonathan has already sort of touched on in his remarks, and it's just an illustration of how when I'm thinking about who are the players in the insurance ecosystem and how do they interact with each other, I think a lot of us are very familiar being policyholders, sort of being on the front lines of insurance issues, and we probably interact with our insurers. But as we get sort of farther down the insurance value chain into the world of Flood Re, the reinsurer world and the world of retrocessionaires, or sort of reinsurance for reinsurers, turtles all the way down. There are a lot of kind of entities within the insurance value chain that shape our experience as policyholders. Some other key players include our lenders, people who are requiring us to maybe get mortgages requiring us to get insurance, we can get mortgages for homes or to get loans for businesses. local governments, obviously measures that promote risk mitigation can take place at the kind of community scale as well. And ideally, we can talk more about some of the challenges with this, but ideally the things that local governments are investing in to reduce flood risk or other types of climate risk, like wildfire risk, for example, those would hopefully eventually translate into premium discounts, as well as reduce risk for communities and individuals. We can talk a bit more about the role of risk modelers and investors in this space. I don't know how kind of deep and technical we want to get, but I think for the time being, good to be aware that data and risk modeling and how risk is mapped and analyzed and quantified, all of that is quite significant in the price that you're ultimately charged for your insurance. And so if your insurance company, like someone mentioned in the chat about Aviva raising rates because of a change to maps, well, the way that the data changes, that can impact the rate that you pay, in addition to the things that you actually do to on a physical level to your property. And so that's an important consideration in all of this. Great if you can invest in you to be able to have I'm obviously based in the US, so just to give a bit of international context on what's happening with premiums here, there have been some pretty sharp increases in the last, I would say 5 to 10 years or so. It varies a bit by state, but obviously California has been in the headlines this year, given the sort of wildfires that have taken place there and the scale of the devastation. I think that the wildfires in January of 2025 were something like 3 or 4 times the previous greatest insured losses for wildfires on record globally. So there's some pretty big intensifying events. But as Jonathan has pointed out, I'm sure, it's not just climate change that is affecting people's risk. How a particular property is constructed and what its kind of risk profile is, and and how much value is at risk at a particular place. Jane, you've come off mute. Do you have a question or comment?
No, I was just going to say we lost you for a bit, but you came back, so I didn't speak.
Okay. Please stop me if I go away again. So this is that equation that I was just talking about. This is sort of kind of a fundamental linchpin of the way that insurers price risk. And again, I think we tend to use risk quite colloquially, like, oh, I'm very concerned about the risk of my property being flooded. But in insurance terms, that actually is a quantified assessment of what is the likelihood of your thing at risk interacting with a hazard and it being vulnerable or not vulnerable to an event. And if any of these 3 variables change, that can increase the risk and increase prices. So that's why things like inflation, for example, can influence the price of insurance, just in a similar way that intensifying wildfires can. This is a bit of my own personal view on what the insurance industry could be doing a bit more of to help policyholders address risk. Again, this is something that Flood Re does really well with its cedents, but I think too often in insurance, it can be a bit transactional, especially in the private sector, where it's a lot about, okay, we're gonna, we know you need property insurance. We're gonna try to get you to buy the same property insurance policy. Maybe the rate changes a bit, but I think because insurance companies and people in insurance are the main risk management expert that most people ever interact with, to think not just about, buying an insurance, but also helping people identify their risk, understand how it's changing, do something to reduce the risk before ever getting to the point of issuing an insurance policy. And we have seen over the last couple of years trends where some of the larger insurance companies, particularly for commercial insurance, I will say, but where some of the larger insurance companies are bringing in or investing in in-house teams to help clients with risk mitigation in addition to that risk transfer side. So that's in addition to that insurance side. So I think that's a really positive trend. I think Flood Re has really been a leader in that. There's some amount of work like that happening in the United States, in places like Australia, Canada as well, thinking about like not only how do we ensure that people can get insurance, but how do we ensure that we're helping them reduce their risk. And I think the more that we can do of that in light of the climate trends, the better. So building on that point, some of the work that I did prior to my current role involved and actually some in my current role as well, involved this sort of key insight where I started, which was thinking about how all these different players across the ecosystem of risk and insurability impact people's ability to get insurance that's affordable, and their ability to mitigate risk. So I think one key takeaway from today, I hope for all of you, is that although insurance can sometimes be a very siloed industry where underwriters are focusing on doing the next contract and agents or brokers are focused on doing the next deal, there's actually, I think, more and more opportunity for kind of cross-pollination and collaboration across sectors, where local governments, for example, are speaking with their local insurance agents about, okay, what are the challenges that policyholders are facing? And is there something that we as a government can advocate for, in a regional policy platform or state policy platform in the US? Also thinking about, how does a state or a government support risk mitigation and ensure that they're working with insurance companies or risk modelers to quantify the benefits of that risk mitigation? That's an area I think where there's also a lot of opportunity. These two pictures are from two events that I've been involved with that helped bring people together from across the ecosystem to think about what are some sort of opportunities for partnership and coordinated action to move forward on risk mitigation and promoting insurability, and also things like, improving building codes to make homes more resilient, or thinking strategically about land use and future development for insurability purposes.
But I've not been to
I think someone maybe came off mute. Okay, thank you. And so both of these convenings were sort of building on this theme about bringing people together from across sectors and across perspectives to share ideas on what the challenges are that they're each experiencing, and then how they can work in a coordinated way across different spheres of action to kind of address risk issues and ensure that there's financing available for risk mitigation and for insurance that's affordable to people, or that takes steps in that direction. So I can share more information about these specific events if anyone wants to learn more about what's happening in Florida. That's where I started my career. It's a place that's obviously on the front lines of all of this. And I have some reports and things that I can maybe put in the chat in a bit. So this builds on my earlier point too. I would say that I'm an advocate for insurers kind of taking a more holistic approach to addressing their clients' risks, whether that's, individual homeowners or renters or commercial businesses, et cetera. And some of this builds on what I've already been talking about as far as, not just selling the client the next policy, but thinking about, how can I help them address their underlying risk, and recognize that insurance is just one piece of that. Also thinking about accounting for the investments that clients and communities do make in risk mitigation. There's a lot that is going really well in the modeling world, and a lot of areas for improvement, particularly when it comes to things like quantifying nature-based solutions and green infrastructure that can help reduce the impacts of climate change. And that's something where Jonathan can maybe speak a bit about some of the work that's happening in the UK, because that's, I think, an area where the UK is really distinguishing itself right now when I look at what's happening globally. And then I think these other points about resilient rebuilding, collaborating across sectors, investing in innovation, that's all stuff that I think is covered a little bit already. I won't go too far in the weeds here, because I feel like I've talked at you quite a bit, but basically a lot of us are familiar with indemnity insurance, which is like our normal insurance policies, but there are opportunities for innovation and thinking about different kinds of risks, what insurance is, but there are other types of financial services that are like that. And so there have been some things tested in countries in the developing world, in particular, that I think we can learn some lessons from in places like the UK and Western Europe, and US, Australia, Canada. So that these are just some of the logos of the organizations that have tried and quite successfully in some cases piloted parametric insurance or things like catastrophe bonds, which again, we don't need to get in the weeds of all of that. It's a bit kind of technical. I can maybe talk about it more in a Q&A, but just know, I think for the purposes of this discussion, that it's really good for the insurance industry to be thinking creatively about what are the other opportunities and other kinds of risk transfer that we can maybe experiment with that support communities' ability to build back better or to access insurance when traditional insurance isn't working so well anymore. So this is about one of those particular innovations, catastrophe bonds, and the point here is that there has been a lot of increased take up of this particular type of risk transfer mechanism. I can share these slides with Jane after the conversation ends in case anyone wants to look at some additional resources, but that's basically what this is. I'd in particular point to Insurance for Good, which is something that a colleague of mine here in the US has started. It's a nonprofit that helps engage with local governments in particular to kind of enhance their literacy around insurance. She's done quite a few pilot projects with different communities around the United States. It has a lot of just good intro to insurance information. So that's one resource in particular I'd check out. And then some of the other things are a bit further in the weeds, depending on how far you want to go. But I think I'll pause there.
If you let me have the information, I can share it with everyone. So yeah, thank you very much. Thanks, Kate. I think that you did an amazing job considering that you've just landed from somewhere. I don't know where you've been traveling from, but thank you so much. A load of information, but we already have quite a lot of questions. So if I may, I'm just going to dive straight in with some of the questions. So the first one is, how does Flood cover the financial risk to them by taking on higher risk properties?
Yeah, so we reinsure. We are to some degree a big risk transfer vehicle. We reinsure from insurers, but then we reinsure ourselves. And this year, for the first time, we used a catastrophe bond, one of the things that Kate just mentioned. And yeah, it's worth saying our reinsurance is getting a lot more expensive, and it's not doing this isn't actually just that easy an activity. The fact that our program grew by 20%, and those are 20% of the highest risk properties, that's not a place that's the global markets look favorably on us. So we're having to really talk through what because if we can't pick and choose, we don't pick and choose the properties that come to us. We take what we're given, and what we're given is typically what others don't want because they see as too high risk, which creates issues. And so we're talking through with our members, with the insurers, how they think this will affect future costs and how we want to vary parameters to make sure that we're getting the best opportunities in the global market to transfer that risk.
Interesting.
Basically, keep costs.
Okay, so I'm up against somebody who's using technical language here. Kevil says, "Hi, Jonathan. Did you say Flood is based on betterment rather than indemnity? So properties are being rebuilt with more resilient building materials, etc., and Flood are funding the extra costs associated with this." I think he's just checking facts here.
Exactly right. I mean, the Build Back Better program is, but that's still a relatively small portion of our book, but it is the thing that we're trying to mainstream. So that's where we'd like to go. I mean, we are still based on indemnity, but through the Build Back Better program, we've introduced an element of, we would call it resilient rebuilding rather than betterment, but yeah, absolutely. Yeah.
Thank you. Jamie Frescott asks an interesting question. Is there a link with Flood and mortgage providers? where properties with assessed flood risk that can't get insurance can be covered, seeded by Flood Re, and then get mortgage eligibility. Thinking here, well, no financial institutions that have both lending and insurance business. I'm sure that makes sense to you.
Yeah, absolutely. So right now, mortgage lenders are very interested in Flood Re because their mortgages are 25 years and we stop existing in 15. So there are properties that are currently covered by us, which are they want to know what the risks are. And it's a long issue. We've got a lot of runway. We've got 15 years to make sure that there's still insurability. But that's what the flood performance certificate program is about. That's what these resilient rebuilding programs are about. How do we credit and incentivize this resilient rebuilding as well as measure it? The mortgage lenders are going to be a partner in piloting that next summer, starting from next summer, the flood performance certificate.
So Wendy Ogden asks, it's good to see that you support NFM techniques. What's that?
Natural flood management.
Excellent. The
Yeah.
Y and USK Foundation are developing landscape scale natural flood management projects, one in the Mono above Monmouth. What do you feel about engaging with the kind of initiative that is storing water in upper catchments in order to reduce flood risk in lower parts of catchments? Very specific question here. I don't know if either of you are able to help with that. We're often asked what the insurance sector are doing in this space.
Yeah, it's a great question. Completely supportive of it. And in a way, so I said over the last decade, the Environment Agency has done an amazing job pouring concrete. Not totally pouring, not only pouring concrete, that's a bit reductive, but mainly pouring concrete. And a lot of the best locations have now been built out, and I think they're coming to recognize that the home level stuff, property flood resilience, is part of the picture, and natural flood management's a big part of the picture. With natural systems, you can slow that water before it gets to the defenses, reduce the wear and tear on defenses. It does a lot. And so those three things are going to be a really big part of the picture. And in October, Flood Action Week, lots of announcements came out. One of them was about changing the flood formula. So they're going to start funding natural flood management where they previously haven't. Huge, huge development. And what is the insurance industry's role in it? We've been pushing for that for a while. I've done a bunch of innovation projects. So sometimes there's this view that the insurers should pay for it, but we view it as flood defenses, or that was part of the deal that created Flood Re. EA pays for flood defenses, insurers fund the insurance mechanisms. But we were part of a project called the Wire Valley Project that did this business model. And really, we did that to prove that it works because no one else was kicking in the funding. So we just wanted to show, look, NFM is as good in certain cases. Some cases you can't protect with concrete. And so, we will kind of keep doing some of these proof of concept things where I think it's relevant, but it's really a great step that the government is now going to fund it because that's where you get scale. Like we've done a couple little one-off things, but it's ultimately the 1 billion and now 1.4 billion in flood defenses. Even a proportion of that just dwarfs anything we were doing in our innovation funding. So it's great.
I think maybe if I could just add one thing to that, I would like to see the insurance industry, and some people, some companies, some individuals are doing this, but I think maybe make more of a concerted effort as a collective to better quantify some of the benefits of natural flood management and ensure that that is something that can be translated into premium reductions over time, or at least like make a start on doing the research, more of the research that needs to happen to ensure that NFM techniques are incorporated in catastrophe models and other kinds of models that are sort of the tools of the trade. Because right now it's very inconsistent if that happens at all. And it really does, to Jonathan's point, it really takes the likes of a Flood Re or a government entity or a philanthropy or nonprofit getting involved and saying, look, we are gonna make this project happen, and we're gonna, figure out how to communicate the benefits. But if we could standardize the way that benefits of floodplain management are assessed, across the industry, I think that would also really help toward the development of new products and kind of maybe getting the insurance industry to recognize the benefits and maybe at some point become more likely to invest in this sort of risk mitigation. So I would add that to our list.
Absolutely.
So, Kate, before you go away, not that you're going anywhere, there's a special question for you. Are there resilience building principles that can be applied across different types of risks, such as floods, wildfires, high winds, all the various kinds of risks that there are?
Great question. I would direct you to the Insurance Institute for Building and Home Safety in the US. Jonathan can maybe speak a bit more about the UK, but in the United States, there's a nonprofit that's funded by the insurance industry, and its entire job is to do things like stress test different kinds of roof designs and see how they hold up in hurricane force winds in their like special wind chamber that they have, or assess different interventions around wildfire risk reduction. So for example, like quantifying how different types of shingles or roof coverings perform versus others. And then over time, they've developed this set of sort of standards for, I think it's winds, definitely wildfire, and maybe one or two other perils that basically say, okay, if you want to make your community maximally resilient to wildfires, here are the steps that you should be taking. Here's what you should be doing as a multifamily commercial or multifamily residential property owner, like thinking about here's the investments that you could make in your building up front to ensure that they are more resilient. And then the IA benefits to make sure that they're accounted for. So that is a US resource that I would suggest is a good one. Jonathan, I don't know if there's anything else you'd add.
No, except that, that's the model and they're ahead. And that picture I showed of the aquarium that we've kitted out, that's kind of the first step in creating something similar over here in flooding. But the building standards are there's guidance, but there is not a standard. So, and that the Bonfield Flood Ready review that I mentioned is sort of bringing the right people together to start the development of those building standards. We're on a committee, our flood performance certificate work. We're standardizing the data collection. Before a few months ago, every form was different. So really all that work is happening now to create the flood standards. And that's our big peril. So, what they have in the US in that the kind of building and home safety institute, as well as the standards that exist in a number of places, are ahead of us, as is the crediting. So crediting that against the insurance price. That being said, the insurance price being about 10 times higher in the US, a lot of places, means that when you get a discount, it bites a lot more. Having a super subsidized price here means people don't really notice the crediting in that way. So part of it is, we don't like a discount against this subsidized price, which is already 90% lower than it would be, isn't going to make much of a difference, but it's what happens as Flood Re starts to exit the market and making sure that people are aware you can keep your price low, but it's through those resilient features.
So we have a question from Alex Cartwright in the Natural Hazards Commission. So I suspect he has a professional reason for asking this question. Jonathan, how did you discover that the barriers to uptake of Build Back Better was more delivery chain related than people, mindset, homeowners knowing, acknowledging risk? Does that make sense?
Yeah, absolutely. Oh, and it's a tricky one. I will say through digging. I mean, I think the assumption at the beginning was that it was homeowners, and then we've got a project to survey homeowners. And as we so it's in some cases it's through speaking with the homeowners, but it's in some cases the prep for the project that had people looking at their own delivery chains and realizing perhaps these were not decliners, people who had turned this down. So it was a combination of you know, the actual surveying of individuals, but also the prep for that surveying that made the companies in identifying those individuals look at the processes by which they had quote unquote declined. And so, you know, it's sort of internal auditing as well. I should say, Alex, you from down under, right? Or from New Zealand. So I think we've got someone dialing in from a long way away.
Oh yeah, yeah. It must be middle of the night there, is it? Anyway, so we're getting quite close to the end of our time, but Frank has asked a question which I think may be a quick one to answer. Is there any possibility that Flood-Re may get an extension beyond 2039?
It's frequently discussed, but at present, you know, that's will be a large scale negotiation between the government and insurers, similar to the one which created the scheme. But the 2039 exit date's, I'd say, quite important for creating the incentive to act. It gives a lot of kind of transparency and clarity, but yeah, 10 years, we've set up the systems, we've got widespread market penetration, but now in 15 years, doing resilience at large scale is absolutely the prerogative, because making sure that those homes are improved is going to be key to their future insurability. And, you know, it's about the absolute quantum. If enough homes are made resilient, then you do have a market. But if if homes continue to all largely, there are very few to be resilient in the ways that you'd hope in flood zones, then yeah, then we've missed that opportunity.
Do you see all properties being insurable? Is there a proportion that will just never be viable insurance risks in the future?
I can comment on this first. I think it depends a bit on who you ask. I mean, maybe all properties are insurable, but what price are the insurers going to charge you if you're having repetitive losses 5 times a year because you're in the middle of a flood area? I think the questions that I'm kind of that I would
Uh-oh.
insurable.
We can't hear you, Kate.
Okay, maybe pass to Jonathan then.
Yeah, it's a really difficult question. And I mean, you do see some other countries that have had to do things like manage relocation, so moving entire communities. Australia, there's been some big ones. America, there's been a couple big ones. That hasn't happened in the UK so far. The numbers are relatively small. You see things like coastal erosion creating big problems along the Norfolk coast and others. A lot of I think we can deal with a lot of the properties in the UK. There are a lot of things that can be done. I don't think we're in a position of having huge vulnerabilities, huge unviable communities in the way that are feared in some places elsewhere. That being said, there is a cost to these things. And so some of the properties, you know, in our book, flood every year or every other year at a cost of 50, 60, 70,000 pounds per year. I mean, at what point is that not viable? I mean, certainly right now, Build Back Better is our answer to that. But if those homes are not feasible for those sorts of measures, not structurally suitable, yeah, there are difficult questions to ask. And I think the goal would be to ensure through that, especially that combination of, you know, concrete natural measures, home level measures, to defend as many communities as possible, as best as possible, then you create a viable market. But there will obviously climate change is you know, hitting certain places really hard. And so that's going to make hard choices in the future.
Okay, I've been ignoring Willem, who's asked lots of questions because I've been giving priority to some very serious and deep questions, but I'm going to ask one of his just to finish with, because it's quite, I just want a one sentence answer to this. Is there a case for nationalization of flood risk?
I mean, yes, to some degree it is nationalized in the sense that government is the one that deals with it and, invests in flood defenses. And there is a program, I mean, it is privately paid, but in general, governments don't, I mean, most governments in most places are exposed to the full cost of natural disasters or a significant portion of it. And so that's not necessarily a good place for the taxpayer to be. Rather, we work with the market to kind of redistribute it, and it ends up being a much lower cost for now than doing that just by having the government backstop all the disasters and repayments, but that's
Okay,
I would
listen.
maybe just
Go on,
add
Kate.
to that.
Yeah, go on.
Sorry. I
Yeah,
was just going to say, I might just add to that. I think there are trade-offs in either scenario, whether there's a lot of public sector involvement or very little. And in this case, nationalizing, like in the United States, we have the National Flood Insurance Program, where unfortunately there's a lot of sort of dysfunction and that has to do with who's in the program and like why there are very few low risk properties in there to counterbalance the other ones. And then you get massive debt in the government, which means massive, or not massive, but higher taxation. So I think it's a very good question to be asking, and I think we're going to see shifts in the balance of responsibility, but I wouldn't want to limit it just to one sentence on whether or not we should or should not nationalize some of these.
There's so much more that you two could obviously say. We could go on all evening, I'm absolutely sure. But thank you
I do want to
so
say
much.
one thing that I think is a useful practical one off the back of Willem's comment, which is he said his insurer increased his price by 300%, and so he moved insurers. That is exactly the right thing to do because there's lots of different views of risk in the market, and occasionally insurers will redo their maps and see these huge price increases. I have never, which is a little is an excessive price increase, but the right thing to do in that case is to shop around because someone else in a competitive market will see that risk as lower. And certainly not a 300% markup. And so, yeah, we always advise people if they're seeing that kind of, if they haven't had a flood claim or something like that, and the rise is that big, definitely be shopping around because there are people out there who are typically offering lower prices. The one advantage of the UK market is it costs less than a lot of the others and has a lot of players in there. So well done, Willem, on that one. Yeah.
Thank you so much, both of you, for filling us in on an area that I think quite a few of us knew very little about. Hi, welcome to Speak Up for Our Planet. We're glad that you found us. All of our videos are of experts talking about what they're doing to save the planet and how you can help too. You might like to watch the videos live and ask the expert questions. In that case, just visit our website and click Join Us. Hope to see you soon.